Very prescient, Reg. Henry wants something. He keeps nudging me. I want to change his name to Nudge. He knows when he wants something, never stops poking you. So Henry may want to trade this morning. Good morning, everybody. Hope you had a good evening. Things kind of cooled down here yesterday in the high 80s as opposed to the mid 90s. It was pretty nice. And I think we're actually under 70 this morning. So pretty nice day on tap. Again, with attempts in the mid 80s before it makes it into the 90s this weekend. It's going to be a great 4th of July weekend. Summer as advertised, but not too hot. The overnight equity markets around the globe held up really well. Not a major stock market that was lower. This is in spite of Ukraine's announcement yesterday that they were going after the rebels once again, and all the problems presented by ISIS from Jordan all the way to the capital city of Baghdad in Iraq. So stock markets are holding in very well. Expectations now are for 2,000 in the E-mini and 17,000 in the Dow. I wouldn't be surprised if we had either number by tomorrow's close. I'm pretty sure we're going to make 1975. And these numbers that come out become a part of the consciousness of the trading community, and they're almost like self-fulfilling prophecies. One of the things that's different about trading futures than the normal securities is that they don't screw around. If they get a number that they, like corn's going to $5 or gold's going to 2,000 or the E-mini is going to 2,000, whatever it happens to be, it's there and it happens faster than normal fundamentals would lead you to believe it could happen. So right now the stock market is pointed higher at certain periods of time. That would be enough to make the notes and 30-year trade lower, but they're actually holding in there pretty well. So this morning we have numbers. ADP 213, seen it anywhere from 190 to 230. So counter day is carrying it at 213. Factory orders, seen it anywhere from -0.2 to -0.5. Counter day is carrying it at -0.3. And crude inventories, -2.2. Now, this number would be positive for equities. This number normally would be a negative for equities. Crude comes in that will definitely be a positive for crude oil. But right now, the market just shrugs off bearish news. So these negative economic numbers aren't getting the weight that they normally would. And for us as traders, the saw or the axiom that we work off of is when negative news doesn't break a market, buy it. Now, the dynamic behind that is that when negative news doesn't break a market, some of those folks that are short in anticipation of that negative number will cover those shorts, and that's the dynamic that kicks it off. So when bullish news is ignored, sell it. When bearish news is ignored, buy it. And that rule has served us well. So we've got our tracker all the way down here in this 12 to 16 area. With the auctions next week, this is still a valid trading target. But you can see that we've got support at 20 to 24. So we're going to make our first buy 25 to 21. It may have to make that 25 to 29. I don't know yet. We've got some news to get through. So we'll make buy 1, 21 to 25. On the idea that the ADP number is strong enough to take this market a bit lower. We're going to leave our sell at 31 to 03, and then 7 to 11 will be sell 2. And that's it for the note. Okay, the knob spread widened overnight. And again, we have this reluctance to get heavy short the knob spread. It sells, but it doesn't break. So we had a pretty nice foundation in the 10-16 area. Now we've got a pretty nice foundation in the 11-16, 11 area. So the bid is moving up, and there is a seller definitely at 12. There's no doubt about that, at 12 plus. But you can see the floor is moving up, and that the yield curve is flattened. Now, a flattening yield curve does not necessarily mean economic contraction. It means that the interest rate market out there sees a high probability of economic weakness or softness. Historically, the stock market would be lower off that information right now, but it's not. And the logic behind the stock market is getting weak, Fed will support it, buy stocks, or hold on to the stocks you have. Getting stronger, the Fed can diminish their support for the market, but the economy is getting stronger, buy stocks. So it's pretty hard to go wrong since March of 2009 by buying into breaks. Okay, we have an attractor down here at 135.29. And we've got this low volume number at 13, which is where we are. So I think the sell, once again, is pretty much where it was yesterday, selling failure to take out 16 through 20. So 15s to 19s have worked pretty well, and then 23s to 27s. I don't think we can break it out today with the non-farm payroll numbers that are projected for tomorrow. On the buy side, I'm going to play for news, a little bit the ADP number giving us a shot to buy the 01 to 05 area, but we may have to raise that to 5 to 9. I don't know. So we got 9 as a question mark, 1 to 5 definitely, and then 25 to 29. We'll play off this high volume number down here. Okay, gold held yesterday's gains, but is not higher in the overnight. We still like gold from the long side. Do not like to go home short gold because of what can happen on the opening. But we wanted to buy that 25 area yesterday, and so basically 20 to 25 is where we wanted to get long. So this is what it looks like. So we have rejected prices above 32, so we'll keep our sell at 32.35. That is resistance. There's no magic in that trade. We got the attractor at 34, and then 38 to 40 for sell 2. Still like to buy at 25 plus or minus. And then 20 to 22 would be the preferred buy, but I may not have a shot at getting it down there. The news this morning, ADP numbers would be a negative for gold, and factory orders would be supportive. So we're probably dealing with a split situation with the news. Okay, the euro gave up a little bit. The pattern in the euro and the yen is one day up, one day down. And if you're a trader and you've got the trading ranges pretty well outlined in your trading structure, you can do quite well with that information. We've had a seller against 137. That's the area where we wanted to execute. And then at 137.25 plus or minus, it was a little stronger. But we did like the short side a little better last night, and the market found sellers in the 85 area. So we'll leave that sell the same, 85 to 95. And the numbers this morning, would be supportive for our economy, less so for the Europeans. So the numbers that forecast, the ADP number should bring in light selling. The factory orders number can bring in light buying. So it's most likely it holds in a trading range. So we're going to put 40 to 50 as the buy, and then 20 to 30. Don't think we can really break the market or change it much from because of tomorrow's non-farm payroll numbers. So we'd like to, the 3650 area looks pretty good right now, as does the 37 for a sell. Okay, crude oil is the barometer for how much in danger the Iraqi export market is. It's 2.5 million barrels a day. It was forecast to go to 3 million barrels per day this year, but I don't know if they'll make it. A lot of oil workers have been evacuated from Iraq. The oil production for export is in the southern part of Iraq. So we have had a seller at 106 and a buyer at 105 beneath that, so we're going to lower our buy this morning to 50.75, and the APIs are, not the APIs, but the EIA numbers are forecast to show a draw of 2.2 million barrels into the 4th of July weekend. We normally do not get any selling into the 4th of July weekend because it is the biggest weekend for gas. For the U.S. The most usage. Summer is in full force, and people are going to do the most driving that they can do. So we're going to buy 104.50, 104.75, a little bit lower this morning, letting it stops below the other 2 days' lows, and then the next buy is going to be 104, 104 and a quarter. On the sell side, we're going to be selling into 105.50, and we'll leave it at that. Now on to everybody's favorite contract, the contract that has fleeced more lambs and more professional traders than any other contract out there. So why do people trade it? Well, they trade it because of the volatility and because of the volume. And while it is the toughest market to learn how to trade because of all of the games that are played there, any and every game that can be played, that will be played. And because of the potential reward, that's where people are. And the other one is that everybody's kind of born with a ingrained knowledge of the stock market. No one talks about the fixed income market, which is the world's biggest market, followed by Forex. They do talk about the stock market every day. I mean, no one can get excited about interest rates. Well, interest rates moved a basis point today. That's not going to bring news viewership in. Okay, the easiest trade really to see today is selling failure to take out 72.75. If we can't do that, maybe some profit taking in front of tomorrow's number. The most aggressive trade that we have out here is buying the 65 area plus or minus, and they've made us pay up every day to get long. So Like it or not, that's where you are. That trade does have exposure. I like the idea of getting long against 1960 because it would be retesting the breakout. And if that holds, then we've got a pretty straight shot at least 1972. Okay, the ADP number this morning, if this forecast, 213 would be supportive. Factory orders would not, but you know this market is ignoring bad economic news. And why are they ignoring it? Well, yeah, the first quarter was supposed to be bad. We know April and May have been bad. But the June numbers are going to be great. They're going to show the economy is growing at least 3.5% by stock. So this number right here is discounted. No one will pay attention. Historically, they would pay attention to that particular number, but not on this go-around. So I think the market is pointed higher. We've talked about that structurally. There's no way that you can fight the tape. And like it or not, this is the situation that we find ourselves in. And that's the beauty of the profile, is that it's pretty hard to ignore the structure, all the P's that we look at day in and day out. The volume above time, day in and day out. Volume at the high end of distributions. When we do get selling, it's a B. It's not a trend day lower most of the time, which means long liquidation or profit taking. Okay, it'll take at least 15 minutes to get around the horn, get everything posted. I will see you after that. In the meantime, good trading.